Should you invest through a Hindu undivided family, HUF? There are certain advantages of doing this. An HUF is a separate legal entity for tax purposes. So if your income gets distributed between yourself and the HUF, then you might face a lower rate of tax. For example, let's say you have an income of 30 lakhs a year. If you receive the whole income individually in your name, then in all likelihood you will be taxed at the highest slab rate, which is 30%. But if you split this, let's say half half between yourself and the HUF, then um, the actual rate of tax could be lower because the HUF gets its own standard deduction. The HUF gets its own exemption limit. The HUF gets its own tax saving deductions such as ATC, um, and its own capital gains deduction. So all of this means that the effective rate of tax comes down. But it is not easy to create an HUF. An HUF requires that at least two co-parceners should be there. So co-parcener is a family member who's related to you by blood. So it could be you and your son or you and your daughter. Um, and it requires you to sign an affidavit creating the HUF. But the real tricky part is funding the HUF. If you just transfer money directly from yourself to the HUF, then it is most likely that the income tax department will not give you the benefit of this split taxation, this split entity. They will consider this as made solely for tax purposes. So there are really two ways in which an HUF can acquire assets over time. One is if you conduct a business through the HUF. For example, let's say you are a freelancer and that freelancing income goes to the HUF, or if you have a small shop or something which is run in the name of the HUF. The second is by inheriting property. So let's say that your father is quite old and is making a will, and in that will, your father leaves some money to the HUF instead of you. Then an HUF is allowed to inherit property and can thus have assets in its own name. So it is a long and cumbersome thing. There is a third way, which is if an unrelated party to the family, gives a gift or a loan to the HUF. But all of these ways are not simple and straightforward. They are complex and they take time, especially with inheritance. So these are the impediments to just creating an HUF and investing through it and reaping the tax benefits. But for families for whom an HUF is more than just a tax vehicle, where it is used for the conduct of a family business, it can both help save on tax and uh, be a vehicle for the business. Of course, remember that an HUF doesn't have the structure of a company. So an HUF has people known as co-parceners who have a right to a share of the income of the HUF. It also has members. So your wife, for example, will be a member. Your son or daughter will be a co-parcener. The difference is that the co-parcener can ask for partition of the HUF at any point of time after they attain the age of majority, 18. They can ask for a partition. They can ask for their share of the HUF. The decision maker of the HUF is the Karta, typically the eldest male member of the family. But because it is not a company, it doesn't have shares and the formal structure of a company, it has this co-partner system. It may not be as well suited to running a business in today's modern world as, let's say, a company is or a limited liability partnership is. But if you are interested, if you do have a family and you are interested in starting a family business, then it might well suit you. So feel free to take a look. Thank you.